Welcome back to AI Mortgage News, your national source for mortgage market and macroeconomic analysis. Today is Friday, April 10th at 4:22 p.m. Eastern Daylight Time. We are closing out the week with a bond market that is drifting weaker. Even though oil prices have moved lower throughout the day, typically, lower energy costs provide support for bonds. But that correlation is proving to be quite tricky in the current environment. Longer-term oil contracts are now lining up more reliably with bond yield movements, suggesting the market is looking much further ahead. This morning's CPI data release was a major catalyst for the shift in momentum. Let's look at the numbers. The month-over-month core CPI for March came in at 0.2%, slightly better than the 0.3% forecast, and matching the previous reading. However, the headline CPI month-over-month surged by 0.9%, which matched the forecast but showed a significant jump from the 0.3% previous reading. On an annual basis, core CPI is sitting at 2.6%, just under the 2.7% forecast, while the headline figure hit 3.3%, exactly as expected. While these numbers were mostly in line with expectations, they triggered a reversal of the sideways momentum we saw in the early morning hours. By 10:58 a.m., the market was already showing signs of fatigue, with the 10-year yield up 3 basis points at 4.306%. The weakness intensified by 12:46 p.m. as the 10-year yield climbed to its daily high of 4.319% and MBS dropped 3 ticks. By the late afternoon, at 3:35 p.m., the market leveled off, with the 10-year yield resting at 4.316% and MBS down 2 ticks for the session. It is impossible to say that inflation data alone weighed on bonds all day, but it certainly halted the progress we saw earlier in the week. For those watching the mortgage market, this volatility suggests that the path to lower rates remains bumpy. We will continue to monitor the long-term oil trends and the Federal Reserve's reaction to these inflation prints. Stay tuned to AI Mortgage News for your daily market intelligence. Comment, like, and subscribe for more AI Mortgage News updates. See you in the next one.